When you're new to investing or exploring investing on any platform, whether that be social media or some forum or anything, you'll come across the phrase, do your own research. But what does that actually mean? And no one actually tells you how to do that research. So in this video, I'm going to go through a list of websites, tools, platforms that I think can help do that research, find information, learn about investing, compare funds. And then at the end of the video, once I've gone through that list, I'll go through a live example of picking a fund, a random fund, and then showing how I research that, all the things I consider and how I compare it to other things. Now, it is extremely windy outside today, so I'm hoping the microphone isn't picking up too much, but even if it is, hopefully I can edit out in post-production. You'll be able to tell me in the comments below. And as always, before we get started, I'm not a financial advisor. I make these videos for informational and entertainment purposes. I don't have to say, please do your own research, because that's the whole point of this video. We're going through research tools, but just remember that when investing, your capital is at risk and past performance doesn't guarantee future results. If unsure about anything, consider consulting with a qualified financial advisor. So what I've done is I've created a Google document, and I can share a link to this in the video description, so you'll be able to check it out and get access to all these links. And I've just put a list of all the websites, tools that I've personally come across that I've used that I think are great for researching, learning, comparing funds. I'm going to go through them all, explaining briefly what they are, what you can do on them, and yeah, just my thoughts personally. So right at the top, we have websites for learning. So this is just learning about more how different things work with investing, key terms. So Investopedia, so if you've ever Googled what is an ETF, what is a dividend, any financial term, one of the top results is probably Investopedia. So that's a great resource. Motivator and Banker on Wheels are great resources as well for learning things. That's more like blog posts, but they have regularly updated blogs about all sorts of topics. It's a great resource for learning. Just ETF and ETF Stream, they have like academy/learning sections where you can read through articles learning about all the different things with ETFs, like replication method, domicile, trading currency, distribution policy, all the things you need to know to be able to research ETFs in depth. Now, onto YouTubers and podcasts for learning. So as I put here, there's too many good personal finance YouTubers to list. I could have made this list extremely long, but I've just put the ones I've personally learned the most from. So in this case, first up, I have Lars Kreuger. So Lars Kreuger is one of the first video series. His Investing Demystified series is one of the first I came across when I first started learning about investing about 5 years ago. And in that short playlist, it takes about 25 to 30 minutes to complete. He goes through exactly why it's so hard to beat the market, the benefits of index funds, and just a very simple guide of the basics of investing and how you don't need to be an expert and how it doesn't need to be complicated at all. Next up, we have Ben Felix and the Rational Reminder podcast. These two go together because the Rational Reminder podcast is hosted by Ben Felix and his colleagues. So Ben Felix is one of the best resources on YouTube for learning about investing. And the best thing about Ben Felix is that people can't really disagree with him, or it's very difficult to disagree with anything he says, because every single video he does, he backs up with tons of papers, academic papers and research. So if you want to go against what Ben Felix has said, you've got your work cut out for you, because he's backed up every word that comes out of his mouth with research. So whether it's about the dangers of covered call ETFs, the irrelevance of dividends, the power of index funds, factor investing, there's loads of great topics on his channel. And if you just binge watched Ben Felix on a weekend, you'd probably know more than 99% of investors. I can be pretty confident of that. The same thing goes with the Rational Reminder podcast. This is just a long form version of the Ben Felix YouTube channel. So what I've noticed is that a lot of the topics that Ben does on his YouTube channel, he then also does a podcast talking about the same thing, but in a lot more detail, because obviously podcasts can be over an hour long. So if you really, really want to learn and you enjoy that sort of thing, then the podcast is great, but you don't have to listen to the podcast. If you want more manageable, bite-sized 10, 15-minute videos, then the YouTube channel is where to be. Then obviously Pensioncraft, I'm sure you all know who he is, one of the biggest UK personal finance and investing YouTubers. He covers all sorts of topics, and I've learned lots from him over the years. And finally, James Shack, he's a YouTuber and financial advisor in the UK. On a similar note, I've learned a lot from him. He has loads of great topics, always backs it up with research and data, useful charts on screen. You can learn a lot from him as well. Next up, I have useful chart websites, so Yardeni Research, and one that I've come across recently. I don't know how you pronounce it. Is it multiple or just MultPL? I don't know. But that one has the Shiller PE ratio charts and valuation charts on there. We can just go across to it now. You can see here you have the S&P 500 PE ratio, the Shiller PE ratio, 10-year treasury rate, SP 500 earnings, a lot of charts that are just useful to look at. On a similar note, Yardeni Research, you've got all sorts in here. There's so much, but the one that I'd look at is stock market valuation and stock market PE ratios, you can get a quick look at the 4 PE ratios for the US market. So S&P 500 large cap, S&P 400 mid cap, S&P 600 small cap. So they're interesting to look at. Whether you actually make any decisions on this information, it's completely up to you. As a long-term investor investing into globally diversified funds, I don't really act on this information, but it's just useful to know. Okay, next up, we have websites for checking past performance. So Google Finance is probably the one that people use the most. And the problem with Google Finance is you can't look at total return charts. So if you're looking at a distributing ETF, you're just looking at the price return, or a stock, any stock that pays a dividend, you're just looking at the share price return. You can't see the total return, which is share price appreciation plus dividends received. So that is a drawback of Google Finance. The other drawback of Google Finance is if you're comparing two ETFs and they have a different start point, they launched on a different date, when you click the max chart to compare them over the maximum period, it goes all the way back for the earliest dated ETF, which makes it impossible to compare ETFs that were launched on different dates. That's why I personally prefer these next two, London Stock Exchange and Just ETF, for comparing ETF performance. So London Stock Exchange, you can do individual stocks, ETFs, anything listed on the London Stock Exchange. You have an option to tick total return, which includes dividends, and you can set custom dates at the top as well to compare over. And with Just ETF, it's the same thing really, but just for ETFs. It's in the name, Just ETF. And you can compare using the charting tools on there, put two ETFs, and when you click max on the Just ETF chart, it only goes as far back as the newest ETF. So you can compare ETFs much easier. Right now, ETF/fund research. So I do have my ETF cheat sheet. I think I'll make another updated video on that soon, but this is what it looks like. You can compare ETFs for a range of different categories: developed markets, emerging markets, global, USA, UK, and ETC, so commodities. And I've just put the basic details of the funds here. Then every month I update these performance figures. The year-to-date price return is pulled from Google Finance, whereas the rest I manually update once per month. And it's just to give you a quick glimpse at some options that you might not have known about and be able to compare them all in one place. It doesn't include every single possible ETF because that would make it impossible to maintain, but it just gives a good range of popular and cheap options across a range of categories. And I do have a changelog and disclaimer leaderboard. There's all sorts on here that you can explore. Then there's also Just ETF for comparing and researching ETFs. You click on this one, you can type in whatever ETF you want. The first one that came to my head is this Quality Factor ETF. Type that in, and you have an overview page. You can download the fund documents, brief description, the charting tools that I was talking about, basic details, everything from the index it tracks, fund size, total expense ratio, replication method, volatility, launch date, distribution policy, domicile. There's all sorts on here. So you can it's probably the best place for comparing and researching ETFs. Fund provider website. So this is just whatever the fund provider is, whether that be Vanguard, iShares, State Street, whatever it may be. You always get the most up-to-date data from the fund provider. So whereas Just ETF might have the holdings from a couple of months ago, the fund provider website may even update the holdings daily. So you do get the exact holdings, AUM, that sort of thing will be on the fund provider website. So it's always worth checking that as part of your research process. Pick a Fund is one that I haven't used as much, but it's another tool for finding and comparing funds. AIC is for investment trusts, investment companies. So a lot of people get confused between investment trusts and ETFs, and they'll say, I can't find JGGI or I can't find Scottish Mortgage on Just ETF. You can't find them because they're not ETFs, they're investment companies, and you can instead research them on this AIC website. Morningstar. So Morningstar is one that I've started using a bit more recently, and it does have some great tools. There's a paid section, but there's also quite a bit of free parts of it as well. So if I try and look at this small cap value ETF as an example, well, hopefully it'll come up. I have used it in the past. Yeah, here we are. So what I like about Morningstar is you have all these sort of tools, but you can also look at the portfolio, and it tells you here, you can basically see if that fact ETF is giving you that fact exposure. So this is a small cap value ETF, and you can see, it's tilted towards small value oriented companies. So Morningstar basically analyzes the holdings, and you get a picture of where it is in terms of these factors. You get the price to earnings ratio. So it's price to earnings of 10.84. So it's certainly satisfying that value criteria, is low valuation companies. And you can see how it compares to the category average. So it's high on yield, low on momentum, high on volatility, which you would expect for small caps, and it is obviously high on value rather than growth. So I do think this is quite unique compared to other research tools that you have as well. So it's a good one to have as part of your arsenal. Very quickly run through investment platforms. So every investment platform to differing degrees will have research tools. So Trading 212, for example, on some ETFs, you can see a holdings breakdown, total expense ratio, AUM. Same with Invest Engine, Hargreaves Lansdown, Vanguard, so on, so on. So I've listed these, but the key thing is the quality varies massively and they also update at different times. So you could look at the same ETF on two investment platforms and they give you a different holdings breakdown. That's quite simply because one of the websites might have updated more frequently than the other one. So you do have to be careful. I'd always use third party and the fund provider websites directly to get the most up-to-date data rather than the investment platforms. But it is there and it's a great starting point. Next, bid offer spread. So this is the difference between the price you can buy a share of an ETF or stock at and the price you can sell it at. That difference is the spread. And basically it is the cost of transaction, even on a platform with zero commission. This is part and parcel of buying something listed on a stock exchange. And two ways you can check bid offer spread is one, the London Stock Exchange. So if we go on it and let's say, for example, we look at the Vanguard S&P 500. So this is a very popular fund of highly liquid underlying assets. So in this case, the bid offer spread is tiny. You can see it here. Of course, it's worth remembering that bid offer spread is constantly changing. So what you see here isn't necessarily what you're going to get on your platform, but it does give you a good indication of whether it is a liquid ETF or not. To show you an example of an ETF that isn't liquid, I can think of I think there's Wisdom Tree Emerging Markets. I always like to use an example. I think there's a better example, but it does give you some sort of idea. So the bid offer spread is wider here. And to calculate the bid offer spread, what you can do is you get the difference between them. So in this case, it's 9p divided by the offer price, times that by 100. And there you go, that's the bid offer spread. So in this case, the bid offer spread is 0.55%. That's pretty hefty. So if you bought a share of this ETF and you're immediately down by 0.55%, now you know why. It's probably the bid offer spread. I put Hargreaves Lansdown here as well because on Hargreaves Lansdown, when you click on an ETF or stock page, it does have an indicative spread section. So it gives you an idea of what the bid offer spread is going to be. Next up, index provider website. So when you're researching an ETF and you check Just ETF, for example, or you check the fund provider website and it tells you it tracks an index, another layer of research you can do is you can go to the index provider websites and check the fact sheets for those indexes. So for example, MSCI have factor-based indexes, MSCI World Quality, Sector Neutral Quality, Volatility, Minimum Volatility, Value, Momentum. You can then go look at the MSCI website to read the fact sheets for these indexes. It gives you a good idea of how these indexes work, and that basically gives you a better idea of what's actually going on with your ETF. Then lastly, portfolio trackers. So I'll just put the two that I've used. Google Finance is free. Getquin is also free. There is a paid version, but this is an affiliate link here, so I'm being fully transparent there. That is the only thing on this page that is an affiliate link. If you do sign up via that link, it's at no extra cost to you, and I do earn a small commission if you do use it. This is what Getquin looks like. I have all my portfolios in one place here. You have AI analysis. You can have a look at performance, past performance, full holdings breakdown, and then obviously you can track your investment portfolios. So now I've got my phone here and we're going to go through a live example of how I personally would research an ETF. So I'm on the most popular ETF section on Trading 212, and I'm just going to pick an ETF at random for research. So obviously this is purely as an example, no way of recommendation to invest in this ETF. It's just a random example. So let's go with, I don't know, pick one here. Let's go with CUKX, which is a FTSE 100 ETF. So first up, we can use the investment platform to learn more. So Trading 212 does give us some details here. We can see the expense ratio, the AUM, dividend frequency, annualized performance, and then we can also see the fund allocation, top 10 holdings, sectors, and countries. But of course, we want to learn more about the ETF. So what we'll do now is we'll go over to the Just ETF website. So on Just ETF, first up on the Overview tab, we can get a brief description of what the ETF aims to do. So it tracks the FTSE 100 index, and the FTSE 100 index tracks the 100 largest UK stocks, total expense ratio, replication method, AUM, and importantly, you can see the fund fact sheet and key investor information document there as well. Download them and take a look. First of all, I'd always go to the basic details tab. So now we've got a pretty basic example here. It's a FTSE 100 ETF. The index it tracks, FTSE 100, investment focus, equity, United Kingdom, fund size, 2.5 billion, so a very large fund. Total expense ratio, 0.07%. Physical, full replication. So replication method is just how the ETF aims to replicate the index. If it's full replication, that means it physically holds all the underlying stocks. So all of the FTSE 100 companies the ETF actually holds. If it was physical sampling, that means it does still physically replicate the index, but doesn't own every single stock on the list. Instead, picks a sample of the index to replicate it. Now, usually fund providers are very good at sampling, so you don't need to worry too much about there being a tracking difference between the index and the fund. Usually the sampling methods they use are pretty spot on. To go back to the total expense ratio, that's basically just an estimate annual cost of owning the ETF. This is not a cost that you pay directly. It's taken out of the fund's assets in the background. So the share price performance you see in your portfolio, that is with the fees already taken. You don't pay this manually. And on fund size, that is just the value of all the assets in the fund. All the shares of the fund added together, that is the fund size. Now, larger funds are usually more liquid, which means they're easy to buy and sell, quicker to buy and sell. They might have a tighter bid-offer spread because there are more trades going through. And also, a large fund is very unlikely to be closed by a fund provider because they're probably making a decent amount of money if it's a large fund. Whereas if it's a very small fund that doesn't gain traction, a fund provider may eventually decide it's not worth them keeping it open and then they'll close that fund. So that is something to consider with smaller fund sizes. Whilst it is to be expected for newer funds, they need time to pick up AUM. But if after a number of years it's still a very small fund, there is a chance a fund provider will close that fund. Now, that doesn't mean you lose your money. It just means the fund might be liquidated and you get your cash back, or it might be merged with another fund. Other things to consider here are launch date, so how old or new the ETF is, distribution policy, so there's accumulating or distributing. Accumulating means no dividends are paid out by the fund. Instead, the dividends that the fund receives from the underlying stocks are kept within the fund, reinvested, which in turn pushes up the net asset value of the fund and therefore the share price. On the other hand, with distributing ETFs, on a certain payment schedule, the fund will pay out dividends to shareholders of the ETF. This is usually quarterly, semi-annually, or annually. Now, the total return of a distributing and accumulating ETF should be exactly the same if dividends are reinvested. It just comes down to investor preference and whether you want an income or an accumulation fund. And then the last thing I consider here is fund domicile. This is less of a problem in this case for a FTSE 100 ETF. Most ETFs are domiciled in Ireland. You'll see some domiciled in Luxembourg, and that may be a problem for ETFs that contain US stocks. That's because with US stocks, there's a 30% withholding tax applied on US stock dividends that the fund pays if domiciled in Luxembourg, whereas if the fund is domiciled in Ireland, that withholding tax is only 15%. So for example, if there was two S&P 500 funds that are exactly the same, physical replication, same fees, same AUM fund size, and one was domiciled in Ireland and the other was domiciled in Luxembourg, the one in Ireland will probably be the more favourable one to invest in because of that withholding tax difference. That's not a tax you pay, that's paid at fund level. Next thing on Just ETF is a holdings breakdown, country breakdown, sector breakdown, and importantly, you can see here, it tells you when that was last updated. As I say, for the most up-to-date holdings breakdown, check the fund provider website. The other thing I check here is stock exchange. So this is where you can check the ticker and the trading currency of ETFs. So if you see an ETF listed in euros and you want to see if there's a version listed in pounds or pence, you can check here on Just ETFs. So for example, CUKX is the ticker for the listing on the London Stock Exchange in GBX. GBX is pence. But this ETF is also listed on other stock exchanges in euros. And you can do this vice versa. So as I say, you might come across one listed in euros and want to find the pound version. Trading currency matters because this is all about whether you'll have to pay foreign exchange fees on your platform. If you hold pounds in your investment account and you want to buy an ETF listed in dollars or euros, you're going to have to pay a foreign exchange fee to convert your pounds into dollars to buy that ETF. So most of the time, it makes sense for UK investors to only buy ETFs that are listed in pounds or pence to avoid those foreign exchange fees. On platforms like Trading 212, it is very cheap, but you don't really need to pay that FX fee if you don't need to. On other platforms like Interactive Investor, Hargreaves Lansdown, they can charge you like 1% plus in foreign exchange fees. So it's definitely something to consider when investing. And the last thing I'll go through is the charting tool on Just ETF. You can see the 1 year, 3 year, 5 year maximum returns. And importantly, you can add other ETFs for comparison. So for example, say I want to add an S&P 500 ETF to this chart just to compare. Add that one. And we can see over the past 5 years, the S&P 500 has outperformed the FTSE 100 ETF, but surprisingly not by that much. So it's just interesting to see. Of course, do remember that past performance doesn't guarantee future results, but it's a great tool for comparing ETFs. Make sure that you have the currency that you want listed here because you'll have different performance based on the currency. So if you're a UK investor, have this selected to GBP. And also, if you're comparing distributing ETFs, there'll be an option down here somewhere to tick include dividends. Because I'm comparing accumulating ETFs, that option isn't there. So to sum up, when researching ETFs, here's my research checklist. I check the fees, the total expense ratio. How much does it cost to hold this ETF and how does it compare to other options? Fund size and liquidity. Is it a big enough fund that it's stable, not going to go anywhere, the fund provider's not going to close it? And is it easy to trade? How is the bid-offer spread? Index methodology. What actually is the index it's tracking? I used a very simple example here of a FTSE 100 ETF, but in some cases, ETFs will track indexes with specific filters, whether that be quality, value, or they might have an ESG filter for like ethical investing. Make sure you understand what the actual index is that the ETF tracks. Replication method, physical or synthetic. So we went through physical replication in this video. Synthetic replication works differently where the ETF doesn't actually hold the underlying stocks. Instead, they use a swap agreement with a counterparty to deliver the returns of the index. So there's advantages and disadvantages of this. It does avoid the withholding tax associated with US stock dividends, but as I say, there is that counterparty risk. And you can learn more about synthetic replication on websites like Just ETF and ETF Stream. Domicile, so where is the fund based? And this is good to know as I use the example of Ireland and Luxembourg. Different domiciles will have different withholding tax rate that they pay, the fund pays on the dividends they receive. Accumulating versus distributing. This will come down to personal preference and how you want that income treated. There's various reasons. It might be personal preference or it might come down to tax efficiency about which one you'd go for. For a hands-off approach inside an ISA and a SIP, accumulation is probably better. But as I say, there is no set one is better than the other here. Currency exposure. Is there an FX risk for UK investors? What I mean by that is that if you're buying an ETF that is listed in pounds, but the underlying stocks are in a different currency, then your performance of your investment isn't only going to be determined by the performance of the underlying stocks, but also the performance of the GBP to USD exchange rate. That's why this year, UK investors might not have seen the same returns as their American counterparts because the pound has strengthened against the dollar. Tracking difference. How closely does the ETF follow its benchmark? So tracking difference is the difference between the performance of the index the ETF aims to track and the performance of the ETF itself. Say, for example, an ETF returned 10% in any given year and the index went up by 10.1%, then there's a 0.1 percentage point tracking difference for that ETF. And then finally, bid-offer spread. I cover this in fund size and liquidity, but basically, if you're comparing a range of ETFs, do check that bid-offer spread because this is a cost of transaction and why it's important to not constantly switch ETFs, because if you're constantly switching, you're constantly losing a small amount of money to bid-offer spread. And in some cases, it might not be a small amount of money. If it's a highly illiquid ETF, that bid-offer spread cost can be significant. So that is it for this video. I hope it was useful. Please don't forget that there is that link to the Google document in the video description so you can check out all the links, all the tools yourself. And if there's anything you want me to add, let me know in the comments below. I'll check it out. And if I think it's worth adding, I'll do that. I hope this video wasn't too rambly. Please do bear with me while I try and get used to these more unscripted style videos. I do like doing these as well on top of the more scripted videos, but let me know your thoughts in the comments below. And as always, thank you for watching.